Hey folks, David Frost, LazyGapTrader.com. In this video, we're going to be talking about day trading, but more specifically, gap trading. And we're also going to discuss the good and the bad of gap trading, as well as trading in general. The first stock we're looking at right now is Tailored Brands, which I believe is the old Men's Wearhouse. TLRD is the symbol. Yesterday, the stock closed all the way down below $19 a share, and the stock was gapping higher significantly at the open. And you can see here as I make this video, the stock is up 40% for the day. So we had a large gap higher, and then we traded right into the 25.85 level. And you can see here we made a high in that 1 minute candle of 25.98, and then had the pullback in the next minute, making a low of 25.24. So traders could have gotten 30 cents, 25 cents, 50 cents, whatever they wanted, depending on their risk tolerance. The level that was supposed to cause a price reaction in the other direction at 25.85 did in fact work out. Let's take a pause and go over to the email that goes out to subscribers first thing in the morning. Here's a list of the morning gap trades this morning. There were 4 possibles. We had Lululemon, which also hit its level. We're going to take a look at that one. We had H&R Block, HRB, or Block I guess it's called now. Tailored Brands, which we just looked at. And Sienna Corp, which turned around before the opened, and it wound up being up for the morning, not necessarily down. So that was a scratch off the list. On this list, we're going to focus in on 2 stocks, Lululemon, and we've already talked about Tailored Brands, and you see the 25.85 level there. So Lululemon, we say gap higher. Resistance levels are 71.19 and 75.89. That's a secondary level. Stop and profit target is about 45 to 65 cents. Now this is a guide, and I give stop and profit targets as a guide, but individual traders have to decide how much risk they're willing or not willing to take. This is a guide, and there's also a guide as part of the teachings in the course and how I come up with a guide to trade against as far as a profit target and a stop loss limitation. So we're going to take a look at Lululemon in a second, but there's another part of this list now each and every morning, which is the gap fill trades. Now, so far today, as I make this video, 1 gap fill trade hit its level and it worked out, and that's the top one on the list. What you're looking at is a list of stocks that are approaching their gap fill levels, which is the second component in the course that I teach. And you can see here that as we started the day, Dollar General was only a fraction of a percentage away from its gap fill level. And we're going to take a look at that one also and see what happened, because that's a whole nother gap trading strategy I teach in my course. I teach 2 strategies, the morning gap trades and gap fill trades, and it produces more trades or more possible trades each and every day. So let's go back to the charts. Now this is one where the level worked out perfectly, but it didn't. So this is the other side of trading. I took a loss on this trade today, even though the trade ended up working out. Let me show you what I mean. So the level was $71.19. That was the level I identified to short Lululemon. And as you can see in the first candle of the day, the stock had a very powerful move higher and made a high of 72.70 before pulling back. And as you can see, it's trading significantly below the 71.19 level. And that's trading, folks. And that's one thing that I stress to traders to understand is when you enter a trade, you have to enter a trade on the premise that you're 100% sure it's going to work out. That's confidence. Otherwise, don't take the trade. But on the flip side, you also have to be, as a trader, completely aware that you can't win 100% of the time. With gap trading, we win about 3 out of 4 times, and that's a pretty darn good percentage for traders on one strategy. And that's why we do it over and over and over again. But there are some times where you will lose, and the frustrating ones are the ones where you lose and the trade actually works out and you would have made money. But that's trading, and that's part of the business. So on the morning gap trades, we had 1 loser, we had 1 winner, and now let's see if we can break the tie. Remember the gap fill trade I showed you from the email that went out to subscribers? That was Dollar General. Let's take a look at Dollar General right now. Real quick, as a reminder, the top one, DG, you can see where it says gap fill level, which is the 3rd column from the left, $77.38. And what that means is at $77.38, we're expecting a price reaction in the other direction, in this case downward. That's why it's listed as a short trade. Here's a 5-minute chart of Dollar General, and as you can see, at 9:35 a.m. the stock made a high of $77.38, and just several minutes later at 9:55 making a low of $76.59 for a successful gap fill trade. So as it stands, about midway through the day, we're 2-1. And that's okay. We're going to lose some trades, but we still have 2 positive trades in the books. And that should give you a pretty good idea of what we're looking at in this whole gap trading strategy. It's a wonderful opportunity to learn a strategy that's repeatable and profitable. It works over and over again. Come over to check out the course at lazygaptrader.com. I'm David Frost. Thanks for tuning in, folks.